Hello and welcome to another episode of 90-Second Equities, where I'm delighted to be joined by one of our senior Asia and emerging markets equity analysts, Adrian Lewis. Adrian, last year emerging markets had a great year, really posting some impressive performance, with the MSCI Emerging Markets Index returning 34% over 2025 compared to the S&P 500, which only did around 17% in dollar terms. When a market experiences performance like this, some investors may feel like they have missed out on performance and that they are unlikely to experience the same performance again the next year. So Adrian, my question to you is, even after the strong performance of last year, why should investors still be excited about emerging market equities? 90 seconds, watch that clock.
Thanks, Chris. It's fair to say that emerging markets had a great year last year, and this has continued into 2026, even after a severe drawdown in March, with the MSCI Emerging Markets Index being up 25% year to date. That's over double the MSCI World. But a key point to note is that despite these strong results, MSCI Emerging Markets, the index, trades one standard deviation below developed markets on a one-year forward PE basis. While that suggests there's some way to go in emerging markets to close this valuation gap, we remain cautious that this can be achieved across the board, and we're really looking for companies bottom up where something is changing to improve the returns despite all the turbulence in the markets. One market that really stands out is Korea. South Korean earnings estimates continue to move up. From year-end 2025 through May 2026, even if you strip out the major semiconductor players, Korea's consensus EPS growth has been revised up 42%. With the semiconductor players, this is plus 261%. Part of the rally has been behavioral and governance related. That suggests improving breadth and stable underlying corporate momentum, which seems a much healthier signal than performance driven by a single sector. Again, what we've been trying to do is find companies which not only have the ability to make these improvements, but also the willingness to push them through.
Thanks, Adrian. Emerging markets have certainly shown some impressive performance recently, but we believe there's still plenty of reasons for investors to be excited about EM equities going forward. Thank you all for joining, and see you next time for another episode of 90 Second Equities.